Let me get my guest in. She will tell you much better than I am telling you right now. Shalini Sekhri, who is the Chief Executive Officer at Cosmos Capital. Thank you so much for taking the time. I want to start by asking, the clients that come to you, what do you tell them in terms of the importance of investing in assets outside of India? Why is it important?
Sure. Thanks, Alex, for having me. I think most of us agree that Indians have a huge home bias when it comes to investing. In fact, 98% of all Indian assets are within India itself. In the context of, say, the US, there are at least 27% of their investments outside the country. The UK, that number is as high as 50%. But I think you'll agree that of late, the past couple of years, we are seeing that global investing is becoming very mainstream. And there are, I would like to enumerate maybe 3 or 4 very compelling reasons for this. Firstly, what I see that most of us have a friend, a relative, someone very close to us who's either studying or living abroad. We have a lot of people who have business interests in other parts of the world. And of course, many of us travel for leisure, for medical tourism, and so on. As a result, there is a genuine end use for investors to create assets which are not completely rupee denominated, but rather a fairly meaningful US dollar investment. So one is really the end use, a child going off to study and so on and so forth. Secondly, diversification. Over time, we're seeing that about 90% of all corporate profits in India are really concentrated in good quality 20-odd companies. So as we try and look at the next leg of diversification, where do we look for profitability? Where do we look for returns? And one of the logical answers is to look outwards towards global investment, which can create genuine diversification in portfolios. Coming to another critical point, which is risk management, right? So if you think about it, we suffer from 2 very significant risks by having all our money here. One is, of course, a country risk. Think about, rewind to demonetization. On a single day, we had the index fall 6%. Whereas on the same day, global markets, in fact, were slightly positively up. So when something happens in the world, like COVID or the financial crisis, of course, it affects us. And when something very specific to India happens, it certainly affects our markets in a big way. So there's a very real reason to have some of your money outside the country. The second, and I think well-known risk, is really the currency risk. The last 5 years alone, the rupee has depreciated about 11% versus the dollar. And the long-term 25, 30-year average is something like 3% every year. So staying invested entirely in your own country in rupees is basically a depreciating asset. So that's really, the third point I wanted to make. The fourth point, while, it's not really something we all agree with, India is still a shallow market, right? We are about 3% of the world's market cap. And there's 97% out there waiting to be explored. Not just that, there are some very interesting asset classes, whether it's energy commodities, hedge funds, technology subsectors, which are just not available in a meaningful way in public markets in India today. So I think that's another really good reason. And lastly, as you scan the global markets, you'll find extremely interesting alternate products, which today are just not available in India, whether it's a life settlement fund, so on and so forth. So just to summarize, while I think mutual funds in India have been doing a fantastic job with widening the scope that Indian investors can look at while investing abroad, from what you just heard, you will see that there are various pockets which still one would need to explore an alternate route to access, which we will talk about a bit more as we go along.
Absolutely. And in fact, this opportunity is presenting itself because that cap is being hit, and that cap is being hit, Shalini, because of the interest that has been shown here in India for assets abroad. So this is a good time to be talking about this. We could well see a higher limit in a very short period of time. But let's talk about the alternative means of investing in, say, the United States. How would I go about doing this? You're talking about the LRS, right, which is the Liberalized Remittance Scheme. How does that work, and what are the options within this?
Sure. So that's right, Alex. In fact, the Liberalized Remittance Scheme, or LRS as we like to call it, has been around surprisingly for 18 years. But no one's really exploited it, right? So this was something that came in Feb of 2004. The RBI has allowed Indian individuals, resident Indians, almost no questions asked to take out about $250,000 every year. Of course, the limit was much lower when it first started, but over the years it's gone up. So as we speak, in any financial year, a resident individual can take out 250K, which is close to about 1.9 crores at last count, to do a whole variety of things. This could involve education abroad, medical treatment, travel, so on and so forth. But of course, a large head is investments. So one can buy property, one can buy stocks, bonds, funds, I mean, you name it. So you can practically think of anything that you might want to invest globally, and you can avail. So in fact, as a couple that husband and wife together, it's close to almost $500,000 that you can take out every year for a plethora of requirements that you might have from time to time, right? So this has been around for a while, but I think there's not been sufficient infrastructure that has supported, this entire approach. So it's not just about can you do it, but how do you do it? Who are all the intermediaries available for this, right? So do note, of course, that LRS is only available to individuals. It is not a route that, say, a corporate or a HUF or a trust at this point can use. And Indian banks is really the mechanism where Indian investors can take their rupee assets out of India by converting them to dollars through the LRS route and make investments of various kinds. The process, very simple. There is a form called the A2 form, which also includes a declaration as to the purpose of why you want to take these monies overseas. Various categories, you just choose the most relevant one. And your Indian bank will basically convert money from your rupee account and transfer it in dollars or a currency of your choice to the designated receiving party, which could be a fund. It could be, we will come to the various forms in which you can then use this money and what can you do with it. Coming to costs, LRS does come with the cost of remittances, which means there would be a currency conversion cost that the bank would charge you. There would be a small processing fee that the bank would charge. So these are some expenses which come as part and parcel of sending money abroad of any type, and it also includes money going out for investments. So that's largely the costs associated with LRS. Now coming to really the three main avenues that one can then use this LRS money for. Yes, we can take money out, but once we do, what are the ways in which we can use this? So there are really three primary routes, I would say. The first one being that you can use a broking account, which could be associated with your Indian broking account, say whether it's a HDFC Securities, a Kotak Securities. All of them have tied up with global broking firms to allow their customers to access global markets. So which means that if you want to buy an Alphabet, any of these, Microsofts of the world, you can, in fact, use the tie-ups that your Indian broking houses have already entered into. There are some global brokerages as well that are in India and happy to, accept Indian investors. Interactive Brokers, for example, is quite active. So you can set up an account with basic KYC and, start transacting through them. So this is the first means. Once you, of course, set up these accounts, what would you need to do? You would need to use this LRS mechanism that I just talked you through to send money to this account of your choice, to this broking account, and then you're good to go. What can you buy with this money? Broking accounts allow you to very easily buy stocks and exchange-traded funds or ETFs of your choice. There are, every color and shape available, so the variety is extremely large. The costs associated with this, besides, of course, the cost of moving the money, would be a broking cost, just like we pay in India, which could be as low as 1 cent per share. So, of course, it depends on who you're going ahead with. Right. So once you fund your accounts, you buy the stocks of your choice, you sell the stocks of your choice, and you see your portfolio build up. One caveat here is that this is, in a way, a DIY or a do-it-yourself model. You need to decide what stocks and ETFs you like and buy and sell those. There's really not much fund management that is kind of rolled into this mechanism. Moving on to the second option. The second option is that today there are a lot of aggregator platforms, right, which are technology-driven platforms, which allow you to set up an account with them, again, through fairly simple KYC. Some of the ones that are quite active in India today would be names like Stockle, Vested, Crystal, and so on and so forth. What they allow you to do is you send money into their pool account once you set up an account with them. They credit it to you, and then you can buy, again, a host of things stocks and ETFs, of course. But one additional facility here is that they also have an asset management flavor to these platforms. They have sought and received the required licenses to also do some kind of fund management activity. And most of these platforms will offer clients a choice of either doing it themselves or to be able to take advantage of their expertise and take their advice and build portfolios, which could again be combinations of stocks and ETFs. So that advisory can also come inbuilt for you in case you are, a rookie investor and need to find, ways in which to choose the right thing. In this as well, expenses, in addition to, of course, the broking cost and the cost of sending the money. In case you opt for asset management expertise, there would be some management fee. All this would be made very transparent to you right at the beginning of the relationship, and you can accordingly decide whether to go ahead or not. And there would also be a minimal platform fee that they charge for the ease of doing business with them. The last route is
Shalini, unfortunately, we're running out of Shalini, we're running out of time. So very quickly, that last point that you were raising, which was to invest, I think, directly into asset management companies, right? And that would essentially be like investing in a mutual fund here in India, but you would have to go through a bank. I think you very, very nicely elucidated and explained how someone can go ahead with this, and you very nicely explained the LRS route as well. And I think any viewers listening in will know exactly what they need to do. Thank you so much for taking the time for speaking to us on The Money Show.
Thank you so much. Thanks, Alex.